I'm going to do a quick market recap on several of the sectors. Start with gold. Things are working out just like I said they would. We've got this is not a daily cycle low like some people are trying to label it. This is a half cycle low. Gold's going to do exactly what I said in my last video. It's going to rally into a daily cycle top. We're getting kind of late here. I think we're either on day 23 or 24. My best guess is we're probably going to retest this triple top here. You don't have to rush in to buy, although this is what most everybody is going to do because their emotions are going to tell them, especially if we go slightly above this June high. If we were to make it to say 1300, 1301, something like that, the average trader is going to assume that we've got a breakout and that we're just going to take a rocket shot to the moon. That is not what's going to happen. We are in the final leg up of this first daily cycle. This is where, like I said, that the shorts are going to get their faces ripped off because they're trying to short into the advancing phase of a new intermediate cycle. So the shorts right here are trying to short at this point, like right here. This is the advancing phase of a new intermediate cycle. So they're way too early. So they're gonna lose a lot of money on their shorts. But it's too late to be chasing unless you're just trying to place a 2 or 3 day trade, or if you're have a longer term time horizon and you don't mind being weathering a drawdown, because we're going to have a move into a daily cycle low. And you can see what this first daily cycle low was pretty severe coming out of this intermediate bottom here. So we're going to have one of these. This was not a daily cycle low. We've got something that's more severe coming. So you don't have to rush to buy gold just yet. We're going to get a top here pretty soon. I'm going to guess we'll get it probably when the stock market completes its daily cycle low. So just probably be patient here unless you're just a very short-term trader. We've got, I would say, probably 2 or 3 more days yet. We'll probably test this top, but then we're going to have a much deeper correction, something along the lines of this, and that will be your buying opportunity. So you don't have to panic and rush into the gold market just yet. The energy markets are also doing what I have been saying they would do. This was a yearly cycle low. Again, people are trying to short into the advancing phase of a new intermediate cycle, and that is a mistake. Oil, we're going above $55. Just accept that. It's going to be a grinding move. It's not going to be an easy move because the fundamentals are iffy in oil. There's plenty of production, but the economy is starting to grow again. So, and we've probably got a dollar that's collapsing. So, oil is probably going to test that $60 to $62 range. Put a longer term chart here. So we're probably going to test this resistance zone right in here between 60 and 62, $2. But it's going to take a while to get there. It's going to be a grind, and you can see it already is. We've had one leg up. The bears tried to short it. Like I said, way too early. We're in the advancing phase of an intermediate cycle. Market goes back up. Trying to short again. Still way too early. Back up. We've had a consolidation here. Again, the bears assuming that we're going back down. They've gotten trained by this intermediate decline. They expect price to go back down. We're not going back down. We're still moving up. The intermediate cycle is still advancing. This daily cycle is still advancing. So before this is over, and I expect we still got 2 or 3 more months yet, we're going to test this $60 level, but it's just going to be a very slow, erratic grind higher, one that's going to be hard to make money off of. Your traders will get knocked off over and over during each one of these pullbacks. So Yeah, the end game is oil is going higher. We're going to $60. It's going to take a while to get there. Here's where the real opportunity lies right now. Stocks, I assume, you know, it's hard to predict these daily cycle lows because the plunge protection team can step in at any time and stop these. So I'm going to assume that it's late enough in the daily cycle that the market is trying to move down into a daily cycle low. The money is going to be made trying to pick the bottom of this daily cycle low and get long. Or if you're already long, just hang on because it's not going to last long. We've got the Jackson Hole event coming at the end of August, and we're going to be back at these highs for that event. So there's no real risk here. But if you aren't long, the opportunity is in trying to pick the bottom of this daily cycle decline. This is a right translated daily cycle, so we should not go below this cycle low here. I'm going to guess we've probably got anywhere from 2 to 3 days. The plunge protection team likes to reverse things on Friday, so they make the weekly candle look like a reversal. So we could bottom tomorrow morning and then head back up, and that could be it for the daily cycle decline. There is risk in you definitely don't want to be a short because you saw yesterday what can happen. They can step in at the end of the day and they push the market right back up, and then you get killed on your shorts. So being short, in my opinion, is a very risky trade. The opportunity is in trying to pick the bottom of this daily cycle correction. The difficulty is in that the plunge protection team doesn't usually allow these to run to their natural completion. So a lot of times they will bottom earlier than they would naturally. But assuming that the market is trying to move down into a daily cycle low, then you want to be trying to find a bottom here and then get long for the next leg up. We've seen these 100 times. This is no different than this, or this, or this, or this, or this, or this. That's all that's happening is a corrective move late in the daily cycle. Once it's over, we're going back up. We're going to make new highs again. 10,000 is going to be a piece of cake on the NASDAQ. And when we get into the really nutty phase of the bubble, 20,000 isn't completely out of the question. So here's your opportunity in the stock market over the next several days, trying to pick the daily cycle low. And I think the larger degree intermediate correction has been pushed out probably to October. We're going to get a bottom here pretty soon so that the market is back near the all-time highs for the Jackson Hole event. And then we've got an FOMC meeting in September. So the opportunity for a deeper correction in between FOMC meetings is probably out into October. So right translated cycle should be just a mild move down into the daily cycle low, and then we're off to new highs again.